Industrial gases are the invisible enablers of many key industries like chemicals, energy production, manufacturing, but also medical. Linde has set itself up as the biggest player in this field, and they could deliver an outperformance not only against their peers, but also the S&P 500 over the last 20 years. They cover the whole value chain, from developing and optimizing not only their own plants, but also their customers' plants, and up to the transportation and the sales of the gases itself. Let's find out to what extreme length Linde goes to keep their customers close, and how they can benefit from a hydrogen trend. And of course, we will see if a long-term investment in Linde makes sense right now or not. Linde has the ticker symbol of LIN on the New York Stock Exchange, and they are operating in the material sector. They were founded 1879 and have around 66,000 employees. The headquarters sits in Dublin, Ireland, and the market cap at around 198 billion US dollars. The core business of Linde is the production and supply of industrial gases and process gases like nitrogen, oxygen, argon, but also hydrogen and carbon dioxide. Not only do they supply and produce these gases by themselves, but they also help set up their customers the infrastructure that is necessary to manufacture with these gases and also to store and handle these gases in the end. By far the biggest segment and the core segment of Linde is their gases segment, but they also have the small engineering and other sector, which is mostly joint ventures or third companies. Their gases sector is distributed all over the world, although they are a bit focused on the Americas, so they are a little bit dependent on the US economy. Even though the engineering sector is quite small compared to the gases sector, we will explore later on why I still think this is relevant and why this is one of the strengths of Linde compared to their competitors. The markets that Linde is operating in is the healthcare market, food and beverages, electronics, chemicals, manufacturing, and metals and mining. You can see by the percentages here that it's also quite evenly distributed, although the chemicals and energy sector is the biggest one, but I don't see any point of concern here. What is quite interesting is that Linde is operating in 3 different distribution modes. They have the on-site distribution, the merchant distribution, and the package distribution. Here you can see for the first customer type, the on-site, Linde is basically building these air separation units very close to the plants of the customers, and they connect the customer side directly to their plant with a pipeline. So they are very, very closely linked to their customers, and they bind their customers also for a long period of time to themselves. We will just in a second, we will have a look at the different contract types for this. The second type is the merchant type, and this is basically the distribution of large volumes of gases via trucks to these merchants that sell it to third parties. And last but not least, they also have the packaged distribution type, where they bottle up the gases in these gas canisters and then distribute it to the end customers or to smaller customers. When we have a look at the different contract types and the shares of all these distribution modes, we can see that it's distributed in 3/3 almost. So the on-site makes up 27%, the merchant business makes up 26%, and the packaged business makes up 33%. For on-site, Linde is operating with contracts of 15 to 20 years. So here you can see that they are really binding their customers very close to them. There is a lot of capex necessary to build these pipelines and maybe even to build the plants close to their customers. So it totally makes sense to have these long-term contracts, but that also makes for a very stable business and for a very reliable business over all market cycles. For the merchant business, they have contract lengths of around 3 to 7 years. And for the packaged business, it's short-term contracts of 1 to 3 years. The engineering part of Linde's business is very interesting. With this, they are developing and planning industrial plants like gas processing, air separation, ethylene crackers, and also membrane plants for hydrogen synthesis. They have planned and built more than 4,000 plants already, not only for themselves, but also for the customers. And they are backed by more than 1,000 processing patents. They also own their own logistics teams because these huge modules that are necessary for these plants, they weigh several metric tons and they have to be brought to the site. So this is also planned by Linde itself. They also have a plant CEF service. This is covering everything from the performance optimization, the training, the spare part management, and the maintenance for all these plants. So not only do they build these plants, but they also help their customers to operate and to maintenance these plants properly. Linde already has more than 500 hydrogen plants built, and they are the only company worldwide that can cover the whole hydrogen value chain. So they are really uniquely positioned to profit from a trend to increased hydrogen usage in the near future. When we look at the market trends for the industrial gases market, we can see that the market is bound to increase with a CAGR of 5.7% over the next 10 years. And of course, as market leader, Linde is again in a very strong position to profit from these secular trends. When we look at the different industries, we can see that actually the construction industry is the one that can benefit mostly from these trends. On the other hand, in electronics and also aerospace, the market increase will not be that high. This is true for most of the industrial gases except hydrogen. When we look at hydrogen, the trend is a little bit different. Here we can see that the growth is projected even to 10.2% on an annual basis, and at least until 2028, so for the next 5 years. And we already established also that Linde is the biggest player and the only player right now that can cover the whole hydrogen industry, the whole hydrogen value chain. Let's look at the mode of Linde by doing the Porter's 5 forces analysis now. I would expect the threat of new entrants to be quite low because of the high capex necessary to enter the sector. You saw there are this huge infrastructure and plants necessary to produce these gases, but also to bring them to the end customers. The whole logistics supply chain is also not as easy to set up initially. The threat of substitutes is also quite low. Most of these gases they supply are mandatory for the customers. Sometimes there are substitutes available, but these substitutes are either not as effective as the original ones or they are even more expensive. Also, you cannot just exchange one gas from the other from a handling perspective. So there might even be the case that if you want to switch to substitutes, you have to build up a whole new infrastructure to use them. The competitive rivalry, unfortunately, is quite high because there are only a handful of customers, a handful of suppliers in the space. But Linde, as a market leader, has still quite a good position here, and they have also pricing powers. The bargaining power of their customers is medium to low because of the essential nature of these gases. And also we saw before that Linde is going to great length to make long-term contracts with their customers and to bring added value to their customers by helping them build up these plants and the infrastructure necessary for the gas handling. The bargaining power of their suppliers is unfortunately high to medium. There are only a few key suppliers for the raw material they are using, and any disruption in the supply chain would affect the operations of Linde. However, Linde is trying to mitigate this by having long-term contracts with their suppliers, and they are also trying to use not a single supplier for certain materials, but they are trying to distribute their supply network over a few key suppliers. This is still tough to do if there are not so many market players here. But the overall picture doesn't look too bad, so I think that Linde has quite a good moat in this space. And this is also where the engineering department comes into play, because I think in this case, this engineering department really helps them build up this moat. When we look at the financials of Linde, first of all, I included the sales numbers here, which I usually don't do. But I want to show that the sales in 2023 went down a little bit compared to 2021. But if we look at the operating profit and the net income, the yellow and the green bar here, we can see that both of these are still increasing, even from 2022 to 2023. So this again shows the strong market position and the pricing power that Linde has if they can generate more net income even when the sales decrease. Also, when we look at the margin, the net margin and the operating margin, we can see that both of these also increased in 2023. Unfortunately, in the next years, it seems like the increase will not be as high as in the last years, but still it will go forward. From 2018 to 19, we can see there is a dip in margins, especially the net margin. The reason for this is that in 2018, Linde merged with Praxair. When we look at the trend of the operating margins and the return of invested capital over the last years, we can also again see there was a dip from 2018 to 2019, as I just mentioned. But the overall trend is that this margin and return of capital invested is increasing on a year-over-year basis. So this is very nice to see, and we are sitting at very high values, historically speaking, for Linde here. I just said that it seems like in the next years, these margins will not increase as much as they did in the past years, but still they are on a strong level as of today. So when we look at the growth numbers of Linde by using my checklist, we can see that the revenue growth in the last 5 years was at 22, higher than 22%. Definitely a green checkbox for me. Unfortunately, in the last years, it has declined a little bit on a year-over-year value, but still the 5-year CAGR is a very good number. We have to observe how this will develop in the next years, but I expect actually that this will recover, at least in 2025 again. The net income growth has been on a 5-year CAGR whooping 33%, which is very, very good. And even the year-over-year value has increased by 55%. That's insane and way above my threshold of 10% on a 5-year CAGR. So definitely a green check for me. The free cash flow growth sits at a 5-year CAGR of 18%, which is also very, very good. But when we look at the year-over-year value, that is minus 35%. So this looks a little bit worrying to me. It's still a green checkbox because for my check, I always look at the 5-year CAGR. But in just a minute, we will have a closer look at the free cash flow because we need to understand where this minus 35% is coming from and if this is a trend that will continue in the next years. The free cash flow yield sits at 1.7%, which is okay, but not great. So it's a yellow checkbox for me. Linde has a very clean balance sheet. They have very low debt. The leverage is only 1.13 times EBITDA. So this is very good news and also very nice to see, especially with the higher interest rates that we have as of today. We don't know how this will develop. We don't know how long the interest rates will stay that high. So it is always nice to see a company that has a clean balance sheet, not so much debt, and they are not so much affected by this higher interest rates. Linde is a stable dividend grower. They have a dividend yield of only 1.24%. It's not that high, but they have grown the dividend over the last 30 years on a year-over-year basis. In the last 5 years, the growth has not been that high compared to the historical values, but it was still at 4.3%. So also green checkbox for me. And we just had a look at the margins and the return of invested capital, which did increase in the last years and seems at a very nice level right now. So definitely also a green checkbox for me. So let's see if we can understand where this free cash flow growth of minus 35% on a year-over-year basis is coming from. When we look at the Q3 report that Linde just released in October, we can first see the operating cash flow trend from 2022 in gray to 2023 in blue. We can see that the operating cash flow did decline a little bit on a year-over-year basis, at least in the last quarters, but not that significantly. It's still almost on the level of last year. On the other hand, if we look on the right-hand side, we can see that the year-to-date investment did increase significantly. So the capex of Linde compared to last year were much, much higher. Right now we are sitting at $3.5 billion distributed between base capex, which is the maintenance and base growth that is necessary for Linde, and also the secured growth, which is the capex that is necessary for projects that are just building up, and acquisitions. In this case, it's mostly the projects that they are just building up. At the annual report of 2022, we can see that the capex in this case was only 3.1 billion compared to the 3.5 billion we have as of today. And for the whole year of 2023, Linde is even expecting this to be somewhere between 3.5 billion and 4 billion US dollars. So we can see that the difference in free cash flow from the company is mostly due to these capex investments. A majority of these parts are even for new projects. So we can expect that Linde can generate more cash flow in the next years from this. The valuation of Linde at the moment seems to be quite high, especially for an industrial company as Linde is. When we compare this valuation to their peers in the sector medium, Linde is almost sitting at double the valuation than their peers. At the historical values of Linde, it also seems that they are quite highly valued, especially when we look in the past of around 7 to 10 years ago. Compared to the last 5 years, it doesn't seem to be too bad, but still it's a very high valuation. Before we jump into my fair value calculation, let's see how Linde compares to their peers. We can see that in the PE gap, trailing 12 months and forward, Linde sits at over 30, 33 to 32. And the sector medium is around 16 to 15 here. So they are more than double the value compared to the sector median. The same is actually true when we look at the price to cash flow. In the trailing 12 months, it is set at around 23%, while the sector median was at 7.7. And if we look forward, we can see that it sits at a little bit higher than 20 compared to the sector median of 8. By just comparing these numbers, we can already see the very, very rich valuation of Linde. So for my fair value calculation, I used the numbers that we just saw, and I used the growth rate of the last 5 years for net income growth rate, but also free cash flow growth rate. For the Gordon growth model, which only reflects the dividend payments of Linde, I used a dividend growth rate of 5.5%, which is actually 1% higher than what we just saw in our checklist. But in this case, I revised it up a little bit because the historical values of Linde have been at around almost 10%. So I think the long-term growth rate might be a little bit higher compared to what we have today. So we can immediately see that the fair value of Linde sits quite a bit above the current market price. In this case, we have an average of $570. But we also saw that the valuation of Linde is quite rich compared to their peers. So I think it is quite risky to assume that Linde will stay at this high valuation and will keep these very high growth rates that they had in the last 5 years also over the long run. So let's correct down these numbers to more reasonable values. In case of the free cash flow growth rate, I would like to correct it down to around 12%, which is still very good, but I think it reflects a more conservative growth case for Linde. The price to free cash flow multiples, we just saw that the average of their peers sits at around 8. Let's give them the benefit of a doubt and still think that they will be a bit higher valued compared to the peers. But I would correct this down to a value of around 10, which is much closer to the industry median. And the same for the PE multiple. We just saw that the medium sits at around 16. So let's still give them a little bit of a premium, but maybe correct it down to 20. And in this case, we can see that the valuation comes down to much more reasonable levels. Now we're sitting at the average of $360, which is around 10%, a bit more than 10% below the current stock price. because of this premium valuation and the uncertainty if they can keep their strong market position or not, again, I like to take a more conservative case into account. So I would like to have a higher margin of safety. I really don't like to use these very aggressive numbers and extrapolate them to the future, because it doesn't give me any margin of error. So in this case, I would even use these more reasonable values and still increase my margin of safety to maybe, let's say 15%, maybe even 20%, but let's use 15 for now. And then we are sitting at a fair value average of $340. Depending on the calculation, you can see we are sometimes almost fairly valued, but sometimes even quite undervalued. If you're only looking at the dividends, Linde actually seems to be at a reasonable fair value. Again, if we look at the current growth rate, which was a bit lower, the fair value in this case also drops down significantly. But I think over the long run, it will be again a little bit higher, maybe to this 4.5% that we had in the last years. Maybe also let's give this a little bit more margin of error and put it down to 5%. But now we can see that the fair value average is around 300, and by using a good margin of safety. When we look at the chart and the performance of Linde right now, we can immediately see down here we have the monthly chart, and we see that Linde is sitting at the top valuation. They have their all-time high right now, almost their all-time high. Actually, they had it on the 21st of November. And we are still sitting at a very, very high level after this run-up that was caused by the last earning call. I would not purchase Linde stock at this high level. To me, it seems much more reasonable if they come down again to a level. You can see we have a resistance level right here at 360, which was also one of the averages in our calculation. I would even like to Linde to come down a bit more below this threshold level. But because they are a market leader, I actually don't think that they will come down to these levels, at least in the near future. So when we sum this up, we can see that Linde has a very strong market position and they have a lot of growth prospects going for them. For example, the industry growth in Asia and Africa is bound to increase in the next couple of years, and Linde will definitely benefit from this. They can benefit from the hydrogen trend, and also not only the sales of the hydrogen, but also the buildup of all the infrastructure that is necessary to do this. They have pricing power with the market leading position, which we saw when we compared the sales numbers to the revenue of the last years. And they can definitely also benefit from the trend to green energy, because a lot of these industrial gases are necessary for the manufacturing of solar panels, for example. On the other hand, we have a couple of risk factors that we should take into account. At once, with these industrial gases, they are prone to environmental regulations. So if there is any change in the regulatory structure, it might have an impact on the margins of Linde in the end. On the other hand, the production of these gases, the separation and all these processes, they use up a lot of energy. So Linde is very dependent on the energy costs they have. And we saw in the last years the energy costs increasing. So depending on how this trend goes, it could be a risk factor. It could also be a growth factor when we look at the long run and see that with the regenerative energies, the energy costs might come down in the end. But over the medium term, I think it's more a risk factor than a growth factor, to be honest. Also, there is strong competition in this field, only a couple of players, and they are competing very fiercely against each other, which we saw in our Porter's 5 Forces analysis. And we also saw the very high valuation that Linde has. Even though Linde seems to be a great company and I like the business model a lot, I think they have a very good moat and they have a very, very strong market position. At the current valuation, at the current levels, I think Linde is quite a bit overvalued, and I would like them to come down at least to the range of $360 that we saw before thinking about investing in Linde. Please let me know down in the comment section what you think about Linde as a company, but also as an investment. I also would be very interested to hear what you think about the current valuation of Linde and if they are a good investment or not. With that being said, thank you very much for watching, guys, and see you next week. Bye bye.